if you go back to 1980 when silver hit almost $50, historical volatility got to like 231. According to the Nome of Zurich, means that we could still see a massive move higher because volatility in the precious metals, unlike in the stock market, goes up when the market goes up. In the stock market, volatility goes up when the market goes down.
Silver up 5.5 nearly, and gold up nearly 2%. Why is gold rising when we have a ceasefire, which is kind of counterintuitive? Well, the reason is people are saying ceasefire probably means more ships get through the Strait of Hormuz. More ships going through the Strait of Hormuz means a lower oil price. A lower oil price means less pressure on inflation, means the Federal Reserve has got more possibilities to reduce interest rates, which they might do because the economy is slowing, that's clear.
Gold and silver are strong even in calm geopolitical times, showing a shift in how markets read macro trends. Silver gained over 5%, and gold rose as investors looked past short-term headlines. Marioinnecco, a macro-focused market analyst, and Clive Thompson, a seasoned wealth manager specializing in precious metals, note that this move is driven by liquidity and monetary policy expectations rather than traditional safe haven demand. The ceasefire has lowered immediate oil price pressures, which in turn feeds expectations of softer inflation data and potential rate cuts. That environment tends to favor assets like gold and silver, which benefit from declining real yields. Historical context also supports the possibility of a much larger move, as volatility in precious metals tends to expand during bull markets, unlike equities, where volatility rises in downturns. With volatility still well below past extremes, the setup suggests that this rally may only be in its early stages. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Historical volatility. Historical volatility is a little different than implied volatility. Historical volatility takes the closing prices over a fixed period of time, and it measures how much prices have moved over time. It's a backward-looking thing, yes, but it's also used in the options market for futures, and there's something called implied volatility. And it doesn't give, it's not a predictive, it's not saying, well, we're going to go up here. All it's saying is that is showing you how volatile the market has been at certain points. And so I got the call from the Nome yesterday, and it's something I haven't looked at really that much, historical volatility. And he said, go on investing.com, and all of you can do this. And he said, go into the futures part, go into silver, go into the monthly chart, and go back to the beginning or the chart, which is around 1973-74. And then you go under indicators, and you click on that, and you find historical volatility, and it'll show underneath the price. And I was quite amazed by this because I didn't realize that historical volatility right now is around 83. And if you go back to 1980 when silver hit almost $50, historical volatility got to like 231. According to the Nome of Zurich, means that we could still see a massive move higher because volatility in the precious metals, unlike in the stock market, goes up when the market goes up. In the stock market, volatility goes up when the market goes down, right? So he thinks there's huge potential. And yes, we've made videos in the past month or so, maybe a little longer, saying that a breakout could be imminent. And it hasn't happened, but I think it's still very possible. And Michael Oliver, as well, from Momentum Structural Analysis, he thinks we could see a major breakout in silver by the summer. So yeah, right now, we're still like around 36% of the level from 1980, which means there's still a lot of room for volatility, which would mean for volatility to go up, which would mean much higher prices. And even if you look back here at the highs in 2020, we were near 30. Historical volatility got up to over 100. Yeah, this time around we are at the highs here, and it's only around just above 80. And in 2011 as well, when silver traded up to almost 50 again, it was at 133. So yeah, that's why when there are a lot of analysts out there, technical analysts, who are comparing what we've seen, the top at the end of January in gold and silver, they're saying that is like 1980. But if you look at historical volatility, it's nowhere near like 1980, nor even 2011. And that's why I think the bull market in precious metals and the bear market in fiat currencies and government bonds is still got some years to go. And now I'll show you the chart of gold historical volatility, that one as well. Back in 1980, when we got up to almost 900, it went to like 108. And right now we're only at around 43. So still a lot of room on the upside. Anyway, yeah, markets are still all over the place. I guess the geopolitical uncertainty is still there, but I would stick to being like patient and realizing that the fundamentals, by the fundamentals I mean the fact that central banks and governments need to keep inflating because that's the only way the current currency system. The more debt we get, the more debt we need to roll over. We need to debase the debt. That's the only way the United States, the UK, the West, every country in the world really that has a lot of debt, the only way they'll continue to carry and pay that debt short of defaulting, and I don't think the US will default because they can always print, well, is printing, right?
Low current volatility in precious metals signals this cycle may continue. Silver's volatility is still below past peaks, while prices are high. Looking at long-term data, volatility today is significantly lower than the extreme levels seen at major bull market tops. In previous cycles, especially around 1980 and even 2011, volatility expanded dramatically as prices accelerated higher. By comparison, current levels suggest that the market has not yet reached the kind of speculative intensity typically associated with a final peak. This divergence implies that price action may still have substantial upside potential if volatility begins to expand in line with historical patterns. Unlike equities, which tend to spike in volatility during downturns, precious metals often see volatility rise alongside prices, reinforcing bullish momentum rather than signaling weakness. Debt is rising, and monetary debasement supports long-term demand for hard assets. Let's get back to the interview.
The US markets are going to open up sharply higher. So, for example, the more sexy the company, the more technology-oriented it is, the higher it's going. So, for example, Tesla is set to open up nearly 5% higher at up $16.41, according to what the futures are saying, or what the out-of-hours trading is saying. Palantir is going to open up 3.82% higher. NVIDIA is going to open up 3.61 higher. I'll give you a few examples, see if there's any big ones. Micron Technology, who make DRAM chips, amongst other things, up 10.39% in the pre-opening. MicroStrategy, the Bitcoin company, if you like, they own a lot of Bitcoin, up 6.85 in pre-trading, 6.85%, that is, at 123.72. Meta will be 4.71%, Eli Lilly 1.66%, Intel up 5.27%, Google up 4.14%. Gold is rallying strong. So we'll get to the gold price in a minute, but I'm just looking at the GDX. That should rise very strongly on the open. The GDX is the Van Eck Gold Miners Exchange Traded Fund. So it represents a basket of gold mining and some silver mining companies, and the price of the GDX, the symbol for that stock, reflects the underlying net asset value. So let's just have a quick look what's happening to gold and silver this morning. Should be strongly higher. Now this is kind of counterintuitive because we don't usually expect gold to go down where we hear peace, and we usually expect it to go down where we hear peace, and we expect it to go up where we hear war. But this time it's done the opposite. When the war started, the gold price plunged, and now we're having a ceasefire. The gold price is rising strongly. I'm going to explain why that's happening in a minute. But first, what is the gold price doing today? It's up $89 at $4,795 So it's not far off the all-time peak, which is about 5,500 at the end of January. The silver price is up sharply too. It's up 5.37% today at 76.87 cents, $76.87. Platinum is just above 2,000 at 2,009, and palladium is just above 1,500 at 1,503. They're both up about 3.7%. Palladium, so silver up 5.5 nearly, and gold up nearly. Why is gold rising when we have a ceasefire? It's kind of counterintuitive. Well, the reason is people are saying ceasefire probably means more ships get through the Strait of Hormuz. More ships going through the Strait of Hormuz means a lower oil price. A lower oil price means less pressure on inflation, means the Federal Reserve has got more possibility to reduce interest rates, which they might do because the economy is slowing, that's clear. And they can say, well, we had this blip in inflation, which we are seeing at the moment where inflation is up. But they can say, well, now the oil price is down, the pressure on prices isn't so great, so perhaps we can anticipate the inflationary forces, the pressures of inflation coming away. So yes, we can reduce interest rates. Now, if you reduce interest rates, that means the real rate of interest, that is to say, interest rate minus the inflation rate, gets a little bit less. And if the real rate of interest is less, it means the incentive to hold inflationary hedges like gold becomes greater. So that's kind of the way people are thinking. I think they'll be disappointed slightly on the interest rate front because even though the oil price has come down to $92 or something like that, I don't think it's going to last. I think the expectation we get back to $60 oil, what we were before invasion, isn't that high. But that's where we are at the moment. We're looking like a big rally today on stocks, on gold and silver. And also, funnily enough, we're seeing a big rally on the price of Ethereum and Bitcoin. I mean, Bitcoin did at one point touch 72,000. It was over 72,000 earlier when I looked. It's 71,800 at the moment, 71,811 to be precise, although it moves very rapidly around that sort of number. And Ethereum went through 2,000 yesterday, $2,000. It's now $2,257. So both of those seem to be rallying on the news of ceasefire, let's call it. Sorry, it's not world peace declared, but we can live in hope, I think. Not much going on the bond side. The long bond in the 30-year bond in the United States is currently yielding what is it, 4.84%. Its yield is pretty flat, kind of at the lower end of the last 5 days.
Markets are opening strong in equities, crypto, and metals, signaling a shared shift in investor expectations. Gold is rising toward recent highs. Silver is surging amid a rally in risk assets. This unusual alignment reflects a growing focus on monetary conditions rather than traditional geopolitical reactions. The easing of tensions has lowered oil price pressures, leading investors to anticipate softer inflation data and potential rate cuts. That expectation is driving both growth stocks and inflation hedges higher at the same time. As real interest rates compress, the appeal of holding gold and silver increases, even in a risk-on environment. The current move suggests that liquidity expectations are outweighing conventional safe haven logic, with capital rotating broadly across asset classes. Strong mining stocks and metals show demand is firm, despite recent swings. This price pattern often happens just before stronger trends appear. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.